Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The US and China are meeting in London to discuss China's block on exports of rare earth minerals that the US manufacturing sector needs. The hope is that the settlement will have the US pull back from its tariff-tax war. More likely, it'll be a trade of US AI chips for Chinese rare earth minerals. In the background, the dismantling of civil society and the rule of law continues in the US, but you'll have to get that news of overnight events elsewhere, even though they will have a corrosive impact on commerce. Our first item in the US is that consumer inflation expectations fell back in June to 3.2% for the year ahead, which wasn't what was expected. But a look at the components explains why. It was driven by the expectation that petrol prices will drop on a weakening economy. On the other hand, those surveyed expected food prices to rise by 5.5%, which is a 2-year high, rents by 8.4%. The expectation that their jobless rate will rise remained high. And we should probably point out that analysts are noting that the US Treasury 10-year yield, now 4.5%, is now well above the US nominal GDP growth rate, 3.8%, for its first time since 2011. And that is seen as a signal that corporate insolvencies will now rise noticeably after a long period of relative stability. And China said its CPI price change held at 0.1% of deflation. That is the third month in a row it has recorded that, the fourth month in a row recording deflation. It does seem odd and a tad unlikely that Chinese consumer prices are consistently deflating at such a low level. Anecdotal observations talk of raging price wars. According to the official data, these are having zero impact. Year on year, they say beef prices are down 0.1%, lamb prices are down 2.8%, and milk prices down 1.5%. But beef prices did rise in May from April, according to this data. Meanwhile, Chinese producer prices deflated more, down 3.3% from a year ago, to their fastest rate of decline since July 2023. And China booked another bumper trade surplus in May. Exports rose 4.8%, about what was expected but historically low, while imports fell 3.4% and far more than expected. They benefited from the taco trade in May. Their surplus with the US was $18 billion for the month, although they did export less and import more. To New Zealand, they exported 3% less but imported 11% more, so our surplus rose. To Australia, their exports were little changed, but they imported almost 19% less in May. In Taiwan, they far outshone their neighbour and rival with a huge rise in exports to a new record high and a large rise in imports from the same month a year ago. That contributed to a trade surplus of $12.6 billion for the month, now 1/8 of that of China, even though their economy is only 1/20 as large. The US Treasury 10-year yield is now at 4.49% and down 2 basis points from this time yesterday. And the price of gold will start today at $3,334 an ounce and up $26 from yesterday. Oil prices are firmish in the US, up 50 US cents at just on $65 a barrel, while the international Brent price is just under $67 a barrel. And the Kiwi dollar is now at 60.5 US cents, up 30 basis points from this time yesterday. Against the Aussie, we're up 10 basis points at 92.8 Australian cents. Against the euro, up 20 basis points at 53 euro cents. That all means our trade weighted index starts today at just over 68.4 and up 20 basis points from yesterday. And the Bitcoin price starts today at $108,312 and up 1.9% from yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.